Okay, so this is a continuation for our discussion for proof of cash. We're done with sample problem solving 1 and sample problem 2 as provided in the recorded version of our meeting last Monday. Yeah, I know, last Tuesday rather. Last Tuesday ba yun? Basta na yun na yun. Right? So we're, as a recap lang for this discussion, sample problem solving 1 does not include any concept of errors, whether book or bank errors. Sample problem solving 2 already incorporated the concept of errors, especially in particularly in the book side, but specific on the receipts. Okay? So for this problem, sample problem solving 3, here is the problem. A high-speed company provided the following information to its accountant assigned to make a 4-column reconciliation for the month ended February 28, 2019. So we're given information for January and February. Then we're provided with the errors that committed by the bank. So cash per records, we have 161,200. Cash per bank statement, 158,404, the month of January. Then the cash receipts per book, 1,500,000. Total cash disbursement per record, per book's record, we have 1,123,600. Bank credits, we have 1,247,000, and bank debits still at 996,800. The deposit in transit, 600,000, and outstanding checks, 240,000 for the month of February. Then the errors, we're given with the errors made by the bank. So number 1, a deposit of 23,000 for January was erroneously credited to Max Speed Company's account instead of crediting to High Speed Company's account. The error was corrected by the bank in February. Now, making adjustments for that error is not actually erroneous, but the timing, okay, there is a difference in the timing of making the corrections. The correction should have been made in the month of January. Okay, but however, the correction was made in the February. Again, making the corrections is making the adjustment for the correction is actually correct. It is proper to make adjustment, but only the timing is off. Now, the deposit of 23,000 should have been credited on the account of High Speed Company for the month of January. However, it was credited to Max Speed Company. The result is an understatement on the balance of the account because instead of increasing the account for the 23,000 deposit, such was not recorded because of an erroneous credit to the other company's account. Right? Then 23,000 should have been addition to the month of January, but not on the February. But since it was corrected, it became an addition on the month of February. Then for number 2, a deposit made by High Speed Company for the month of January amounting to 26,000 was reflected by the bank as 62,000. Now this time, the error does not lies on crediting it to another bank account. The scenario is the bank really did recorded the deposit but in an erroneous amount. Instead of crediting 26,000, the bank were able to reflect it as 62,000. The error was corrected in February. It should have been corrected in January. It was an addition, but as an addition, there was an error in the addition. Instead of 26,000, it was recorded more than 26,000. So I guess the difference is 36,000. That is an overstatement. Number 1 is an understatement, ibig sabihin kulang, while number 2 is an overstatement, meaning sobra. Okay? Next, for number 3, a deposit made by High Speed Company during February for 25,000 was unintentionally been neglected by the bank to record. Okay, so unintentionally, because of human error, the bank maybe was able to overlook or neglect the recording of the deposit. So instead of increasing, the effect is the bank account maintains or no increase at all because of the unintentional neglect of recording. So 25,000 is an understatement on the bank account for the month of February. Okay? A deposit made by low speed company during February for 38,000 was erroneously being credited by the bank to high speed company's account. This time it talks about overstatement because there's a recording of a deposit, but that deposit does not pertain to high speed company. It was related to low speed company, an error of crediting deposit. So our account became overstated, meaning nagsobra, because of an error of posting 38,000 as deposit credit. Okay? So the requirements for us is to prepare proof of cash reconciliation. So to present, to start with the adjusted balance method. So for adjusted balance method, I suggest always to master this method because again, the same with a normal bank reconciliation, the foundation of book to bank and bank to book will be patterned here in the adjusted balance method. Okay? Additional input only on the reverse mathematical effect. Okay? So for book records, we normally post everything, the normal reconciling items of the book. So collections of 110,000 for January will be presented as an addition for the column of January. However, since that collection had been part of the receipts up to February, then we have to deduct it from the receipts column only for purposes of getting the amount alone for February. Our goal is to arrive with an amount that pertains only for the February. Okay, so the receipts of 110,000 will be deducted from the receipts column. Now for the February, we all know that we can only record credit memos pertaining to collections when the bank statement has been provided to us by the bank. So the 227,000 receipts or collections for the month of February should be an addition for the receipts and the February column. Next, we have DAIF checks and bank service charges. For the month of January, the 2,300 and the 3,500 DAIF checks and bank service charges respectively, they are debit memos, so they should be posted as a deduction under the January column. And at the same time, since they are included as part of the disbursement for the amount of for February, because again, what was posted are cumulative amounts. In order for us to come up with the amount pertaining only for February disbursements, the DAIF checks of 2,300 and 3,500 shall be deducted also in the column of disbursements. Again, the purpose is only to come up with an amount that pertains for the February. Okay? Then, for February, the 4,000 DAIF check and 5,000 bank service charges will be deducted normally under the February column. But because they pertain to a disbursement, then we post it as an addition under the disbursement column. Should everything else be posted correctly, the adjusted figure should be 265,400 for January. Receipts, we have 1,617,000. Disbursement should be 1,126,800, and for February we have 755,600. All everything else correctly posted, the adjusted figures should come up with 755,600. So let us try 265,400 plus 1,617,000 minus 1,123,800. Wait, I might get it. So 265,400 plus 1,617,000 and minus 126 pala. 126,800, not 1,123,000. Okay, so that's it. It's 755,600. That amount should, as much as possible, should be the same amounts that we're going to arrive for the adjusted balances under the bank records. Now, for the bank records, we incorporated the errors for the deposits or credits or receipts pertaining for the bank. Now, we start with the unadjusted balances, then post the normal reconciling items, the deposit in transit and outstanding checks. So the 230,000 is an addition under the January column, while a deduction under the credits column. It is actually correct that the deposit in transit is a credit amount. It is included in the credit cumulative figure of 1,247,000. But because it pertains to January, we have to deduct it to arrive with the amount that pertains only for the February. Then for February amount of 600,000, both should be recorded as an addition under the credits and February column. Okay? Next, for the deposit in transit, the 110,000 should be deducted for both under January and debits column. Okay? Reason for deducting it under the debits column because outstanding checks pertain to debits. Okay? They are correct that they are debits, but because they are pertaining to January, we have to deduct it from the amount that to the cumulative amount in order for us to arrive with the amount that pertains only for the February debits. Then for the February outstanding checks, it is an addition under the debits column but a normal deduction under the February column. Now to proceed with the errors, we have to again analyze the type of error. So we have recognized it as an error on credit. Okay, an error on credit, so increase or decrease in the amount. Rather understatement or overstatement in the account because of those credits. Now, on January, there is an understatement credit of 23,000. The 23,000 pertains to the deposit that was erroneously credited to the other company's account instead of the account of the company, High Speed Company. Okay? So the error should be corrected on the month of January as posted under the proof of cash column for January. However, since the error was corrected for the month of February, then that means it was included. So to arrive with February amount, we have to deduct the 23,000. Next, the overstatement error on the credits of 36,000 pertains to the difference in the amount of 26,000 correct amount and the 62,000 erroneously posted amount. So the difference is 36,000. If you wish, you can what do you call this? Verify the difference of the two figures. But I guess that is 36,000. Now, 36,000 is an error pertaining to January. So as an error for January, it is an overstatement, which means the cash balance in our bank account is sobra. So we have to deduct 36,000 from that January column. But since the error was corrected as of February, that means it was deducted for February figure. So in order for to correct, we have to add it back the 36,000. Okay? Then for February, there's an understatement of 25,000. The 25,000 again was unintentionally been neglected. Okay? It was not recorded. So to correct the error, simply add 25,000 to both credits and February column. Because of the neglect of unintentional neglect, the effect was there was an understatement. Nagkulang yung ating bank balance. Then for the error, an overstatement of 38,000, the 38,000 resulted from the erroneous credit. So that was a deposit but not high-speed companies deposit. So because of an erroneous credit na nadagdagan, nagsobra ang ating cash balance. So normally we deduct it from the February column. Also under the credits column because okay, the error pertains to the over recording. Over recording, it was recorded but no adjustment has been made for it. So everything else be posted correctly. That should equate to the same amounts at least or at most to 65,400 for January, 1,617,000 for credits, 1,126,800 for debits, and 755,600 for February column. Again, our foundation is the adjusted balance method. Master that one and everything else will follow for book to bank and bank to book. Now to proceed with book to bank, for book to bank, again, we can either use this format or this one. This one is the most common and normal presentation of other books. Now, to explain, we start with the unadjusted balances of the book, normal posting of the reconciling items, just like what we have under the adjusted balance method. It's like we have copy-pasted these figures from adjusted balance method down here to book to bank method. Now, starting with the deposit in transit down to bank errors, those are bank reconciling items. We apply now the so-called reverse mathematical treatment or mathematical effect. Okay? The goal is for us to adjust the balances to come up with the unadjusted balances for the bank. It's like we are actually doing work back or squeeze out. Other reference book termed it as work back or squeeze out. The balance, unadjusted balances per bank. Since book to bank, adjust the book, come up with an adjusted balance per bank. That's the meaning of book to bank. That applies also with the normal bank reconciliation. So if everything else are posted correctly, whether in this format or this one, we should arrive with the same unadjusted balances with what was provided in the problem. So for January, that should equate to the same amount of 158,400. Receipts should be 1,247,000. Credits. Then disbursements or debits should be 996,800, and for February should have been 408,600. Okay? Again, you can either use this format or this one. Either way, as long as you follow the correct application of the reverse mathematical effect for the bank items, if we're using book-to-bank method, then everything else will be good to go. So that would give you the correct amounts for the unadjusted bank balances. Okay? Then moving on with bank to book method, it's just the reverse. Start with the bank balances, bank items, the reconciling items, including the errors. Post it normally, just like what we have under the adjusted balance method earlier. Then starting with the collections down to bank service charges, we apply now the reverse mathematical effect. Okay? The goal is to come up with the unadjusted balances per book. So everything else, when posted correctly, for January should have 161,200. Receipts should be 1,500,000. Disbursement should be 1 million. This should be 1,128,000 rather. 128,600. I forgot earlier in the morning to make corrections. But I'll post a correction on this one. Then for February, tama ba? 123,600. Ay, yeah, 123,600 pala. Ay, sorry. 123,600. Yeah. Because 126,800 yung adjusted balance. Okay. Correction. Self-correction. So that's correct. 1,123,600. Then for February, that should be 37,600. You can either use this method, this format, or this one. Okay? But this is the most common format. Now, the only thing that we're going to consider if we're going to use book to bank and bank to book is uh, uh, on how we answer which of the items are we going to apply the reverse mathematical effect. Always take note of the name itself. So for book to bank, which that means we're going to start normally reconciling the book items. Then afterwards, whatever would be the result will be readjusted with the amounts or figures or the items for the bank or the reconciling items of the bank, but you were going to apply the reverse mathematical effect. The goal is to arrive with unadjusted balances. The same analysis with bank to book. So we start normally with the reconciling items and other items for the bank. Then afterwards, no matter what is the result, adjust it in reverse mathematical effect using the book items to arrive with the unadjusted balances for the book. Okay? That's why I keep on reiterating to master the adjusted balance method. Okay? So that's it for our sample problem solving 3. And for sample problem solving 4, now we're done with errors pertaining to receipts, deposits, or credits. Now, starting with sample problem 4, we're going to incorporate now the concept relating to errors on disbursement, debits, or payments. So starting with sample problem 4, aside from the information that pertains to January and February, we're now provided with information of book errors that pertains to payments or disbursement. Now before that, kindly take a look the cash per records. It is a different figure of 150,000 than the sample problem 3 and all the other sample problems. The cash per bank statement still the same of 158,400. Another different amount is the outstanding checks. It is now on 122,300. Then for the deposit in transit for February, deposit in transit is 150. 573 rather 573,000 and outstanding checks of 239,600. Okay, so those are different amounts from the previous problems. Okay, now pertaining to the errors for the book, number one, a check drawn during January for 6,100 was erroneously omitted by the company's accountant from the records. The error was corrected during February. There should have been an amount to be recorded as payment for the amount of 6,100. However, it was omitted. Because of the omission, no amount has been recorded for that payment. Okay? Therefore, our cash balance per record is overstated while the disbursement is understated. So number one is referring to understatement of disbursement. Meaning, nagsosobra yung ating cash balance, the reason, kulang ang ating disbursement na ni-record. The error was corrected in February, during the month of February. So therefore, it was included as part of the February amount. Next, a check drawn during January amounting to 2,000 was entered in the book 20,000. The error was also corrected in February. Now, the same errors under the the concepts of receipt errors that we have in the previous problem. There were errors that instead of recording a specific amount, iba yung nare-record. For example, another example is instead of 2,000, 20,000 yung nare-record. Another example in advance sa number 3, instead of recording 32,000, the recording was 23,000. Now, for that errors, it pertains to error on input of data. Meaning, it could either be transposition or sliding error. I just forgot to apply what is transposition and sliding. As far as I can remember, transposition error is the interchanging of figure, first two figures or any of the figures. Then sliding error, parang nagsosobra ng input. I just don't know, nakalimutan ko na kasi. It is being applied or applied under auditing. Because auditing is more actually on correcting records. Okay? The more on assessing the accuracy of the records. Okay, so going back. So instead of 2,000, what was recorded was 20,000. So the error was corrected in February, meaning the amount has been included in the February figures. Okay? So it is an overstatement reason because instead of recording 2,000, we recorded 20,000. So therefore, because of the error, our cash balance is understated, kulang. But our payments or disbursement sobra. Kaya we have to make adjustment on that one. Then for number 3, a cash payment for February, instead of 32,000, it was recorded as 23,000. This time, it refers to understatement. It was recorded, but no adjustment has been made for that error. Okay? The recording of 32,000 as an error needs to be adjusted. That's why it needs adjustment. No adjustment has been made for the month of February. Therefore, since 32,000, 23,000 was recorded instead of 32,000, our disbursement for February is understated while our cash balance is overstated. Sobra ang cash, kulang ang disbursement. Then for number 4, a check drawn in the amount of 1,000 for February payments was recorded as 11,000. No adjustment has also been made yet. So instead of recording again for 1,000 disbursement, what was recorded was 11,000. So kulang yung cash balance because sobra ang disbursement. So therefore, we have to adjust our cash because of the overstatement. Now, the requirements still the same, prepare a proof of cash. So for the adjusted balance method, okay, we start with the book. Unadjusted balances of the book, post normally and correctly the amounts. For collections, for January, added in the January but deducted for under receipts. For February, addition for both receipts and February column. For DIF checks, January and bank service charge January, deduct it normally under January, but also deduct it under the disbursements column because they are included as disbursement. But they pertains to January, that's why we have to deduct it from the 1,100,000. Then for February, DIF check of 4,000 and bank service charge of 5,000, deduct it normally under the February, but add it under the disbursement column. Take note, they are debit memos. We don't have a record it yet for the month of February until we're provided with the bank statement. So we can only add 4,000 and 5,000 in the disbursement if we're provided with information that such are disbursement on our part. Now, moving on with the errors. For the errors, there's a disbursement understatement, the 6,100. So going back with the problem, that was erroneously omitted. So therefore, kulang ang disbursement, sobra naman yung cash. That's the reason why the error was posted as a deduction under January column. Since the error was corrected for February, it was included. Okay? Included in February, so we have to deduct it. The purpose again is to arrive only for the amount of the for the February. Okay? It is correct that it is part of disbursement. But for purposes of coming up or arriving the February amount alone, we have to deduct 6,100. Next, the 18,000 overstatement. The 18,000 overstatement resulted from the error of recording. Instead of 2,000, it was recorded to 20,000. So the difference is 18,000. Okay? Sobra yung ating disbursement, kaya nagkukulang yung cash. So therefore, under January, it should have been added. Okay? Added. Added back. Now, since the error was corrected in February, we have to adjust February by adding it back again. Okay? Kasi yung error is an overstatement. Therefore, we have to deduct from the disbursement. Since it was a deduction adjustment under February, we have to add it back kasi binawasan yung February amount. Next, for February, understatement of 9,000. The 9,000 was the difference of the 32,000 and 23,000 figures. Okay? Erroneous recording. Instead of 32, it was recorded as 23,000. So kulang ang disbursement, sobra naman yung cash balance. That's why we have an addition of 9,000 under disbursement column, but a deduction under February column. And for the disbursement, overstatement, the last error, so it is an error on recording 1,000 disbursement as an error to 11,000. So therefore, a difference of 10,000, since sobra ang disbursement, we have to make adjustment, we have to deduct 10,000. And since the disbursement is overstated, it causes for the cash balance in the February to be understated. That's why we made an addition adjustment for 10,000. Now, everything else posted correctly. The figures for January, receipts, disbursement, and February column should be 266,100, 1,590,000, 1,114,100, and 742,000. Now, if everything else are correct, if we make use of those adjusted balances, it should come up with 742,000 for the column of February. So to correct, to check, 266,100 plus 1,590,000 minus 1,114,100. So that comes up with 742,000. Okay? Then for bank records, since no other errors for the bank, normally adjust the bank, unadjusted bank balances with deposit in transit and outstanding checks. Okay? So everything else should at least equate or at most equate on the balances arrive under the book records. So the same, 266,100, 1,590,000, 1,114,100, and 742,000. Now, in connection again with normal bank reconciliation, if everything else are posted, considered, and accounted for, no other errors have been committed by the book or by the bank, okay? If still there are discrepancies in the amounts, adjusted amounts of the book and the bank, always take note to consider bank records to be more accurate over the book records. Okay? External, there's a notion or an idea or a concept rather in audit that external evidences are more accurate or stronger evidence over internal records. Okay? Because companies may manipulate their own records, but the external companies in which we have transactions with will not, at least or at most, falsify or manipulate the records unless there is self-interest, parang ganun. Self-interest na yung ba parang kumbaga nag-uusap-usap kayo na parang gawin na lang erroneous to. Pero I do not promote any falsification practices. Pero hindi natin sure, baka ma-encounter natin yan in the future. Pero yan, okay? Always consider bank as more accurate when it comes to record keeping. So for for book to bank, we can either use that format or this one. It's up to you. But we start normally with the book. As I have told you earlier, for book to bank, we start with the book. Normally adjust the book balances with the book reconciling items. Then afterwards, readjust it with the bank reconciling items by applying the reverse mathematical effect on the bank reconciling items. Again, the goal is to arrive with the unadjusted balances for the bank. Okay? It's like we are connecting the format or the solution that we have under adjusted balances. Binabaliktad lang natin yung effect kay bank para makuha yung unadjusted balances. You can either use this one or this one. Again, the foundation lies under the adjusted balance method. And for bank to book, we start normally with the bank balances, adjust it normally with the normal bank reconciling items with the normal mathematical effect, then apply the reverse mathematical effect on the book reconciling items. This time, si book naman yung reverse mathematical effect. Yung goal natin is to adjust everything else to come up with the unadjusted book balances. Okay? So normal yung reconciliation natin kay bank items, pero reverse yung pagka-reconcile natin for the book items. So depende. The application of the reverse mathematical effect or treatment depends on the method that we're going to use. Okay? So ito na lang tandaan para mas madali. Always take note the second term, because the second term will be the clue on what items we're going to reconcile. Reconcile in the reverse mathematical effect. For book to bank, the second term is bank. Okay? Disregarding the term 2 because 2 is basta. So bank is the second term other than the book. So si bank, yan yung pinaka-last na term. Yan yung ibig sabihin, that's the clue that the bank items will be reconciled using the reverse mathematical effect. Well, for bank to book, it is the book that's the second term or the last term that we're going to consider. Then therefore, we're going to apply reverse mathematical effect for the book items. Okay? So yun na lang ang tandaan natin. We can either use this format or this one. Okay? As long as we can determine correctly which of the reconciling items will be applied with reverse mathematical effect. Okay? Last for sample problem solving 5 or sample problem 5. So we're provided again with information, and this time for the errors pertaining to the bank debits or bank payments. Take a look with the information for January. We have a different cash per book records. It is on 170,900. Then for the total cash disbursement per book for February, it is on 1,110,900. Yes. Then the collections, it is 227,000. Deposit in transit for February, 600,000, and outstanding checks, and we have it for 240,000. Now, we proceed with the errors. Now, for bank errors, so number 1, January bank service charge of 9,900 was erroneously charged by the bank to low speed company instead of the company's account. The error was corrected by the bank in February. Now, uh, um, there was an amount charged against our account that was a bank service charge of 9,900. That bank service charge should have been charged against low speed. But because of an erroneous charging, it was charged on our account. We are high-speed company here. So, because of the error, our cash balance is overstated while our disbursement will be understated. Okay? Because instead of charging it to our account, it was charged to low speed. Wait. So yung service charge, not charge kay low speed instead of company's account. Okay. Yeah. So kay low speed, na-charge instead sa atin. So tama. Mataas ang ating cash balance pero mas konti yung debit ni bank. So therefore, kulang talaga ang debit, sobra yung cash balance. So that is an understatement. Number 2, January bank service charge. This time, kay average speed dapat, but it was recorded as a debit to high-speed company's account. It was charged against our account as high-speed company rather than charging it to average speed. So that is an overstatement. So sobra ang debit, but so nagkulang yung ating cash balance. Then a February bank service charge to high-speed company, 5,400 was omitted. It was omitted. So therefore, no recording of that bank service charge. So yung effect, sobra cash balance pero kulang yung debits. Okay, so understatement of debits. The number 4, a bank service charge to average speed company, 7,400 was recorded twice against high-speed companies. So that service charge should have pertained to average speed company. The amount is 7,400. But take note, the error pertains to a twice recording. So therefore, not only single recording of 7,400. Rather, it was recorded doubled or twice. So therefore, 7,400 times 2 should be 14,800 as total overstatement. Okay, that is not our bank service charge. It was for average speed company. But it was recorded twice against our account. So kulang yung account, kulang yung balance ng account, pero sobra naman yung debit or charge sa atin. So to prepare our bank reconciliation, proof of cash reconciliation, adjusted balance method, we start with the book. Normal reconciliation using the reconciling items. Ayan. So everything else correctly posted. We should come up with 275,100 for January, 1,617,000 for the receipts, and 1,114,100 for disbursement. And for February, we have 778,000. Should really everything else posted correctly, using the adjusted balances arrived, we should come up with 778 for February. Okay, so kindly verify the figures. So 275,100 plus 1,617,000 minus 1,114,100. Yeah, that should equate to 778,000 for February. So that amount should be the same amount that we're going to arrive for the bank. Now for bank records, we start with unadjusted balances. Then normally adjust it with the deposit in transit and outstanding checks. So everything else should be correctly posted. For bank errors, debits, understatement debit, of 9,900. So kulang yung debit na yung na-debit ni bank. So therefore sobra yung ating cash balance for January. That's why we deducted 9,900. But since there was a correction made by the bank for February, therefore it was included as part of February. So we have to deduct it also under the debits column. It's not erroneous to have it part of the debits, total debits. Only that we deduct it to arrive with the February amount. For the debits, overstatement of 6,600, going back with the problem, it was recorded as part of debits to high speed instead of the other company's account. So kulang yung ating cash balance for January. That's why we have added back 6,600. And since the error was included, okay, as adjustment for February, we have to add back because correcting such error causes deduction sa February. So kaya add back tayo for debits ng February. Then for debits of February, there's an understatement, erroneously omission of the 5,400. So therefore, kulang yung ating debits. Kulang yung debits, so therefore, add back 5,400 for the debits. Then yung ating cash balance for February is overstated. That's why, meaning nagsobra, that's why nag-deduct tayo ng 5,400. Kasi understated debits. Kulang yung recording ng debits, kaya sobra yung cash balance. Now, for the last error, the overstatement, take note, it was recorded twice. Okay, it was recorded twice. So, the debit should be, the error on the debit, it was included because it was charged against us or for high-speed company, so it was included under the debits. So, as a correction, we have to deduct 14,800. Since it was included in the debits, therefore, our January cash balance is understated. That's the reason why we have an addition effect, our adjustment, under the column of February for the same amount of 14,800. Everything else posted correctly. That should arrive with the same figures of 275,100 for January, 1,617 for credits, 1,114,100 for debits, and 778,000 for February. Okay? Then moving on with book to bank. Book to bank, again, there is a clue that the bank items will be applied with reverse mathematical effect. Kasi nga, later siya ng book. Okay? So, siya yung sumunod sa book. So, nauna si book, meaning normal recording or normal posting or normal adjustment. But si bank, we apply reverse mathematical effect. You can use either this format or this one. The goal is to arrive with the unadjusted book balances. Okay? So yun ha, always take note on when to apply the reverse mathematical effect. Main foundation is the adjusted balance method. For bank to book, so nauna si bank, huli si book, therefore, we normally adjust bank items with the normal mathematical effect, but apply the reverse mathematical effect for the book. Okay, so yun na lang yung technique natin. Okay, you can either use that format or this one. Okay, either way, it's up to you as long as we can arrive with correct figures for the unadjusted balances. Okay, so that's it. That concludes our discussion for proof of cash.